move on to company news now. Metropolitan has reported a 48% hike in normalized headline earnings per share. The insurer has also confirmed that its board has approved a further share buyback of 500 million rand. This after buybacks to the tune of 1.75 billion rand in the past 18 months. Investment analyst Stembile Bopela shares her reaction to the company's latest half-year results.
For Old Mutual, the high interest rates environment has been quite supportive of, an improvement in investment returns from the portfolio assets for Momentum as well, which supported profitability overall, which was another highlight for them. I think they did also, management did mention that, new business volumes as well as profitability are focus areas for them. They did just cite that, the current levels of new business margins as well as, or rather just the current new business margins aren't at the desired levels where they are right now. So I think the focus on that and the focus on driving sales volumes and improving the sales mix will likely, improve or increase the value of new business for them. But the group, remains well capitalized with improving capital ratios. I think a positive for them, thanks to the earnings growth and the ongoing focus on capital efficiency. I think also for them, the increased dividend up 20% to 60 cents this period should also be welcomed by investors.
Momentum Metropolitan CEO Jeanette Marais speaks to us now about this performance. A warm welcome to you. First, your reaction as an insurer to the latest interest rate decision.
Oh my goodness. I have no idea what they decided. I now feel absolutely terrible, but I've been busy with the media the whole day, so please read the good news.
Sorry about that, Janet, but they've decided to hold at 8.25%. And the reason why I asked for your reaction first before we get into the numbers that Momentum has produced is because the interest rate level does directly affect your client base.
Yeah, so you know what, it's almost in a way one of those conundrums that we have is, your analysts have actually just mentioned that as well, is that on the one hand, high interest rates are good for companies like ourselves because, it helps us in terms of the returns that we can get for our clients. But at the same time, it is terrible for our client base because I think at the moment with the economy where it is, with high inflation, and everything else that is going on, our consumers are really under pressure. So, in a way, I don't think it's a surprise that they held the interest rate where it is, but it is disappointing. And I think it is time that, they start to look differently at it and also start to just ease up a little to give our consumers a bit of breathing space.
Given that the South African consumer remains under pressure, what have you seen in terms of clientele, their behavior, and in relation to the performance that Momentum Metropolitan has now produced in this regard?
Well, so as a group, we actually cover almost the entire spectrum of, income groups, LSM groups of consumers in South Africa. On the one hand, on the upper end of the market and the more the wealthier market, of course, there's our products in terms of Momentum Investments, Momentum Retail, upper middle class, and then Metropolitan is operating more in the area of funeral insurance and, very simple savings products. And I think the behavior we see is actually quite different. So on the one hand, there are still a lot of investable income around or investable capital. And we've seen that with, the excellent results that we've had in Momentum Investments. And specifically there, it is interesting, I think, that, in a very uncertain world, there is still a flight to safety. So we have done incredibly well. I think it's an 83% increase in annuity sales in that sense. So clients obviously now are looking for life annuities where there's a guarantee. They know the income they're going to get until they pass away, and they're looking for guaranteed products. So in that sense, really, that kind of flight to safety. In our life business, the life business has also had an excellent year, very good sales, but a highly, highly competitive market. And in the life insurance space, we now see that we almost compete for every single policy that we write. So a lot of pressure on, really, really being sharp on our pricing, being very competitive on pricing. Again, I think, COVID has taught our clients a lesson in the sense that I don't think that maybe in the past a client might have let their life insurance go first. I think that's now going last. I think COVID has shown people that anything can happen, and that if you then not covered with life insurance or funeral cover, you'll be in trouble. Then in Metropolitan, it is a very big focus for us to make sure that we write quality business, and that we write business to clients who are actually, firstly, they want the product, and secondly, they can afford to keep on paying that premium.
Speaking of successes, you've seen a progressive move with a previous share buyback, and you've also announced that there is deliberation of a continuation or a further buyback. Do talk to us about that and what the projections are with regards to exactly the outcomes that you're looking for here.
Well, so if you think about it, life insurance companies or groups like ours do generate quite a lot of cash, and there's options of what you can do with it. On the one hand, you could put it in reserves, but that makes no sense because you just wouldn't be able to generate the kind of returns that your shareholders are looking for. Or you could apply it and invest in your business itself. At the moment, we generate enough cash to be able to do both. So we are investing heavily in technology projects and growth projects in our business. But at the same time, the excess cash we have, to return to our shareholders. So firstly, a very healthy dividend, 20% uplift in the interim dividend that we have declared. And then we've declared, or we've made another 500 million available as share buybacks. Now, share buybacks at this point in time in where we find ourselves makes a lot of sense, and simply because the embedded value of our business, which is really the true value, if you would take all of our businesses, all of its kind of valuations and add it up, is actually still a lot higher than if you simply go and you say, take all the shares in issue and times it by the share price, which really says there's a discount to our embedded value. And if you can then take cash and you can buy back shares at a much lower value than what they are actually worth, you actually indirectly create value for your existing shareholders. Over the last, 2 years or 3 years of doing these buybacks, we've actually generated close to 2 billion rand in extra value for our existing shareholders by doing these buybacks. And we will continue to do so for as long as, on the one hand, we have the capital to do it, and on the other hand, for as long as we trade at this kind of discount rate to our embedded value.
Thank you so much for your input. Jeanette Marais is the CEO at Momentum Metropolitan. They're talking us through their latest financials, positive in terms of the projections as well as that share buyback that she was talking us through.